Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of April 22nd through April 26th, where it looks like bears are back in the stock market, huh? So let's revisit our trading strategies on how we can make money trading when the bears are back in the stock market. And we'll revisit all those again on how we can make money trading when bears are back in the stock market. So let's get started. Welcome again, Walter Lyons, Ricky Khan. Thank you for joining us in the chat today. Hope you all are doing well. So here's our Google document with our notes for part one of our weekly trading game plan for April 22nd through April 26th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. You can find a direct link to this Google document in the description box below. We store all of our weekly trading game plan notes, Google documents in a publicly accessible Google Drive folder. So you can refer back to the notes from this week as well as previous weeks. And again, you can find a direct link to that Google Drive folder in the description box below. Welcome, Geofinatix. Thank you for joining us. Glad to see you. Thank you. So first we'll see how the markets ended up on Friday in FinViz. So go to the main page of FinViz. See the Dow eked out a small gain, 0.56%. The NASDAQ dropped over 2%, and S&P dropped 0.88 or almost 1%. So although we had majority of the drops, we got 53% advancers, so more than 50% advancing versus 42% declining. We only got 16% new highs, 84% new lows. Got 25% now above their 50-day moving average, 75% below. And we have just over 55% above their 200-day moving average, 44% below. So we see an overall bearish trend. We did get a positive green market on close candle in all the indices, but again, pretty much steadily down for the S&P and NASDAQ and pretty much flat and slightly positive for the Dow. Welcome, Gerald Fitz, Easy Mike. Glad to see you today. Hope you all are doing well. So we see in the heat map on Friday, we got a rotation out of the Magnificent Seven. So I think on Thursday, there was a flight to safety into the Magnificent Seven. Friday, rotation mostly out of the Magnificent Seven, including Google Meta. So that's why communication services is red. Financials mostly green. Lilly dragged healthcare down. Industrials are slightly positive, except for GE, etc. As we'll see, it was pretty much a flight to safety, a very defensive move on Friday. See some of the news. So Netflix kind of dropped on their stopping sharing subscriber numbers. Again, Magnificent Seven earnings is coming up, so we'll see that in the earnings calendar. Crowded mega cap trade. So again, we saw how that dragged the markets down on Friday. Nvidia stock plunge leads Magnificent Seven. So again, when Nvidia is way down over 10%, so that dragged all the Magnificent Seven, dragged all the indices down. NASDAQ falls more than 2% to post 6th straight losing day as Nvidia craters 10%. So again, we'll talk about, the bears are back in the stock market and how we can make money trading the stock market. So again, we saw oil popped up on, the Israeli attack on Iran, which didn't turn out to be a whole lot. So that quickly retraced out of that pop on cooling down for now. Natural gas, again, been just kind of hovering in the 1.7 area. Gold obviously popped up as well, up over 2,400. We'll see gold was consolidating around that 2,400. It looks like that's a pretty good support level. See the Dow futures are still green. NASDAQ, S&P are pretty still negative. DXY, I think, is around 106. We'll see. It looks like the yen may have found a bottom. The euro recovered a little bit. Pound declined a little bit. Treasury yields were quite a bit higher in the 4.7s. We'll see they retraced a little bit on Friday, still near 4.7. And we still have an inversion between the 5 and 10s. I think the 2 years up over 5%. And as I was speculating in the past, I thought we might get a retest of that 5% bond yield um, rate. So let's look at each of the major indices. I already know they're not looking real great. So again, all Dow broke down below its 50-day moving average, although it does look like it's got some support trying to regain that 380 level. Again, IWM very weak. It's very sensitive to bond yields. And again, since we're not going to get rate cuts anytime soon, and you're hearing Fed officials coming out reiterating that they're not in any hurry to cut, might get fewer cuts than what they had speculated. Again, that's going to be a negative for your small caps. The Russell, you can see it's approaching its longer-term moving average. Probably get some support from that. If it breaks down below that, again, quite a ways to fall. Again, we see that precipitous drop in the Nasdaq. We see again it's got broke down below the previous lows. It's kind of just hovering in midair. It's got quite a bit of room to fall before it gets that long-term moving average, before it gets to this longer-term low. So again, a lot of downside potential in the Nasdaq. Similarly in the SPY, got plenty of downside room. Looks like it's trying to get some support around that 490-ish area. But again, it's got a lot of big gap between that and the moving average. So again, a lot of potential downside in the SPY as well. We look at the technology components, and again, just a quick reminder, each of these screeners you can find in the screeners tab in both our ETFs Google Sheet and our Watchlist Google Sheet, and in the notes. So again, the breakdown of the technology components. Again, we see this extreme weakness in ARK. Again, got plenty of room to fall. It's down below its moving averages. Not a whole lot of support. Maybe this previous bottom, but then it's got a couple gaps to fill. So again, a lot of potential downside in ARK. So if you want to, again, short that, we'll talk about the short ETFs. The short is SARK, S-A-R-K. FANG-U, so the FANGs even broke down. The Magnificent 7 broke down. Again, it's got some support around that, 230-ish, 250-ish level, but again, down below its short-term moving average, got plenty of room before it hits the longer-term moving average. So again, Magnificent 7, the FANGs finally broke down, and plenty of downside there as well. I'll make this comment now, and we'll probably reiterate it again. But again, we're talking about, the bears are back. We'll talk about trading strategies on how to make money trading when the bears are back in the stock market. And again, just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is my opinion and should be considered for education and entertainment purposes only. But here's my opinion, is I think the buy the dippers in the Magnificent 7, the relentless buy the dippers in the Magnificent 7 will continue to try to buy those dips. And I think we'll get some, corrections to the upside in the Magnificent 7. Again, my humble opinion, I think the buy the dippers, the relentless buy the dippers in the Mag 7s will keep coming in, keep buying, buoying up the Magnificent 7. Although, as we'll see, Apple and Tesla have kind of fallen out of favor. So negative, their sentiments turn negative. So not all the FANGs, have that magnificent shine anymore. But again, I believe that we're going to continue to see these corrections up and then probably profit taking, selling back down. Again, biotech's going to be weak, just like small caps. They need rate cuts. They need debt financing. So a lot of potential downside continuing in biotechs. Semiconductors finally broke down. Again, they finally took profits in NVIDIA and SMCI, AMD, MU, etc. But you can see it's getting close to its long-term moving average. Again, I expect a bounce in NVIDIA. Again, the relentless buy the dippers in NVIDIA will give us a correction in there. We'll see if it holds that support in the long-term moving average. If it breaks down, we'll probably have a retest of the low. See the NASDAQ, the TQs, again, getting close to that moving average. Might get some support there. And that'll be, again, buoyed up by the Magnificent Seven tech stocks, mega cap techs. See the broad technologies, again, close to this support level. So again, we might see some support, a bounce off that longer term support level in the broad technology. And then if it breaks through that, again, a retest to the previous low. You could hear even on Kramer and things, people are finally, not all hype on tech. So sentiment's definitely shifting there. So again, these are all the longs, and we'll see and talk about the shorts and how to trade the downside using ETFs, which are the inverse of all of these. Obviously, SQQQ is the inverse of TQQQ. TECS is the inverse of TECL. Lab D is the inverse of Lab U, and SOXS is the inverse of SOXL. And then we have FANG D is the inverse of FANG U. SARK, again, is the inverse of ARK K. And we do have some alternative inverses also in our ETF Google Sheet. Welcome, Ellen Krantz, Sydney Osborne. Glad to see you all in the chat today. Hope you all are doing well. So let me go grab a quick drink, and we'll look at the groups and the industries, sectors for Friday and for the week. Okay, if I go over to the groups tab in FinViz, again, for Friday, we see this, very defensive move, flight to safety. It's a little ironic. They go into utilities, even though the rates are high, and we don't expect rate cuts, and the utilities are rate sensitive. So this is definitely a traditional defensive move, flight to safety. So they go into financials, energy, utilities, and defensive. So again, a very defensive flight to safety move on Friday. I expect that to correct a little bit. Again, I think that was just an overreaction, flight to safety, defensive move. So then obviously the worst sectors are cyclicals, communication services, and technology, dragged down mostly by the Magnificent Seven mega cap techs. So even for the week, we see the week was very defensive. Again, utilities, defensive, financials. So again, a very defensive approach with the conflict in the Middle East, and then the decline of the Magnificent Seven, markets turning bearish. Again, we got a reaction and a move to defensive. So again, real estate also negative, as it's sensitive to yield. So we saw when the yields retraced a little bit on Friday, real estate got a little bit positive. So again, for the months, energy in general is doing pretty well. Again, utilities, very defensive move. Some basic materials, again, real estate very negative, and you see technologies turned pretty negative. Again, for the quarter, now technology is negative, real estate's negative, energy and basic materials mostly positive, financials again doing pretty well for the quarter. Got the industries. So we had some pharmaceuticals do okay, again, utilities, insurance, energy, banks. See a lot of oil, so a lot of energy. Got some REITs, rebounded a little bit on Friday. Again, semiconductors, that's mostly NVIDIA. Got computer hardware negative, internet retail, it's probably Amazon. Got some negativity in travel. Again, solar's again going to be very negative, sensitive to yields and in need of rate cuts. Airlines were positive for the week. I think that was United cutting back a little bit on their costs. Coking coal was positive, so it's energy, insurance, utilities. And silver's been kind of hovering, I think, in the 28s, it's consolidating around 28. Uranium was negative for the week, although it's still relatively high. Again, very negative in solar. The industrial REITs, one of the industrial REITs came out and said they're cutting back a little bit. There was a little weakness in demand in some of those. That might present an opportunity in the near future that we've been starting to look at. Again, semiconductors very negative, so that's a big sentiment change that now semiconductors pretty negative. Silver, gold positive for the month. Copper, uranium, coal, oil. REITs generally negative for the month, so we see that industrial REIT pretty negative. Semiconductors, some other REITs negative. Again, the REITs are bond yield sensitive, interest rate sensitive. So materials, energy for the quarter, etc. Easy Mike says big tech starts to report next Friday. So we'll again briefly look at the earnings calendar. Yeah, the Mag 7. And I'll talk about the potential reaction to that in a minute. Let me open up the economic calendar in investing.com. We'll go over some of my notes from the economic data from last week, and then we'll look at the economic data for the upcoming week. Let me grab a quick drink. Just a quick reminder, as this economic data comes out, I try to capture it and post it as quickly as possible in the Surf the Markets channel in our Discord. Our Discord is free to join. You can find a free invite to our Discord in the description box below. You can see I try to capture a snapshot of the economic data out of investing.com, also post the raw data as well as any current news. So as news comes out, I'll try to post the important news as well. We see this posting that Biden's tripling tariffs on Chinese steel and aluminum. So that's a potential opportunity for some laggard steel and aluminum companies. And we'll talk about one of those that we've watched over time tomorrow. Wanted to go a couple of my notes. Powell had a speech on Tuesday, and I captured just some of the notes. It's pretty much the same message we've been hearing. As recent data shows lack of further progress on inflation. So we saw in last week's CPI, PPI data, inflation is not coming down as quickly as they had hoped. So restrictive policy needs further time to work. So higher for longer. Again, something we've been saying for a long time. If higher inflation persists, Fed can maintain current rate as long as needed. So again, higher for longer. Again, they're not in any rush to cut. The data doesn't support cutting. Firm inflation last quarter has introduced new uncertainty over when and whether the Fed will be able to lower rates later this year. So again, Powell's dialing back that previous comments about 3 cuts. Again, the market had overreacted and projected 6 or 7. Now I think they're back down to 1 or 2. And I think the probabilities is like in September and possibly later. And we'll look at those as we approach the next Fed interest rate decision. But again, you'll hear a number of the Fed officials are dialing back the number and need for cuts anytime soon. So we should just expect, higher for longer. No need to cut anytime soon. Uh, Rates will stay around 5%. So again, I think bond yields will retest that 5% area again. And then Thursday, we got jobless claims data. Again, initial claims came out less than expected, same as before. Continuing claims, again, less than expected, slightly above the last week. The average stayed the same. So again, job market's plenty resilient. Um, Fed doesn't, have any reason to fear a spike in unemployment, which is their other mandate. Another comment I'll make, I keep hearing other YouTubers and people talk about the Fed being concerned about GDP recession, and I've commented before, that is not one of the Fed's mandates. They have two mandates: price stability and full employment. Um, the only reason they're concerned about a recession is if that causes a spike in unemployment. We're not seeing any kind of spike in employment. So again, the Fed, I can't say they don't care about a recession, but that is not one of their mandates. GDP is not a measure of their mandate. It is employment, and so we do have a slowing economy, but the job market remains resilient. They don't need to cut. So, and I hope that helps. Then Friday, another reason we had increased volatility was options expiration. So as we'll see, the VIX is it's been spiking up on this conflict in the Middle East, but then quickly pretty much retracing, but the overall trend is still upward. So we'll see that in the futures in a minute. So let's look at the other economic data from last week and see what's coming up next week. So again, we had various Fed officials talking. Some are a little more hawkish than others, but they are, dialing back their predictions of rate cuts. Retail sales came out above expectations for March. That was a little bit surprising. So there's not a whole lot of, retail holidays in March. So says, hey, the U.S. consumer is still spending. So as someone said last week when we talked about what they're going to do with their tax money, they're still spending like drunken sailors. So there's the consumers still being resilient, haven't run out of money apparently or maxed out their credit cards yet. So bond auctions, a little weakness. I'm hearing some weakness in the bond auctions, therefore the pop up in yields. So building permits, you see that significant drop. Again, mortgage rates are high, new starts, building permits, all below expectations. So the housing market, new homes sales is starting to weaken significantly. Industrial production, pretty much as expected. Atlanta Fed GDP, again, no signs of recession there. Mortgage rates, again, bumped up as 10-year yield went up. So now 7.13. So again, that's going to cause more weakness in the housing market. Oil inventories were up. So even with all the conflict in the Middle East, it's not causing any issues with our oil supplies at this time. There is, fear if they do close the Straits of Hormuz, that causes a lot of issues with not only just oil, but also supply chains as well. Talked about jobless claims. Existing home sales was pretty much as expected. It is down. Again, not unexpected given the high mortgage rates. And then rig counts bumped up a little bit. Total rig counts bumped up a little bit again with higher oil prices in the 80s. And not surprising that they're capitalizing a little bit on higher oil prices. Okay, so next week, see what economic, we got building permits on Tuesday. I would expect that to continue to be weak. So manufacturing, new home sales, again, I'd expect that to continue to be weak. Mortgage rates, probably, around that area. Durable goods orders, normal oil and natural gas inventories. Still got, looks like the Fed might finally be in their quiet period, so not as many Fed talkers. Probably cause a little less volatility. Then we get PCE. Core PCE is an important input to the Fed's decision, so that'll probably be watched. GDP for Q1. Again, I don't expect any signs of recession. Get jobless claims data. Retail inventories. And then again, core PCE on Friday. So again, Thursday, Friday, we get the PCE data, personal income and spending. So again, all important inputs to the Fed's decision for the following week. And then we get consumer sentiment. So again, we'll see. Last time that deteriorated a little bit. We'll see, and expected inflation was still in the threes. If that continues in the threes, again, that will be a negative for any kind of rate cuts. You can also see the earnings calendar in investing.com. So I won't go through the whole list. If anybody in the chat has particular ones, so again, we're just getting in the heart of earnings calendar. We had Netflix report. We're going to have the rest of the Magnificent Seven start reporting towards the end of the week. Again, that's going to cause a lot of volatility. Here's another opinion of mine, is that I think, typically the Mag 7 report decent earnings. So it's going to be important to listen to their guidance. I think we're going to see a stall in growth in a lot of the Magnificent Seven, like Microsoft, Amazon Cloud, Google Cloud, etc. I think it'll still be positive, but if we see that stall in growth, that could be perceived negatively. So we could get a negative reaction. Now, I could very well be wrong, and they could report good cloud growth. Also, there's Chat GPT uptake, AI uptake from each of these Magnificent Seven. That's going to be another important factor. So it's a lot about their conference call and the details underneath their earnings, not so much the headline numbers to look for. But again, any kind of disappointment. Then we've got Tesla on Tuesday, PepsiCo, Visa, so brought GE. So again, a heavy earnings calendar this week. And again, you hear guidance is very important. Spotify. So I would highly recommend you go through the earnings calendar of anything that you might be holding and interested in buying, or also against sentiments for similar sectors. You can hear our discussions of how to trade when earnings matter, and earnings definitely matter. Not just earnings, but also guidance. Also, just a quick reminder, we've got the next FOMC meeting will be April 30th, May 1st. So the next interest rate decision will be May 1st, and we'll look at the probabilities for any kind of change in their position. The non-SEP meeting, so we won't get a dot plot during that meeting. I don't expect any change whatsoever. Just a lot of talk about the same thing we heard Powell say, higher for longer, no rush to cut, resilient job market, inflation's too high, et cetera, et cetera. So let me grab a drink and we'll look at the market screen in Webull. Just a quick reminder, if you're not already using Webull, you can get free stocks, up to 75 free fractional shares of stocks. If you open an account with 25K or more, you can get 20 free fractional shares. If you open with less than 25K, they're also offering still about 5% interest on your uninvested cash in a cash account. And I think till the end of the month, they're still offering that 4.5% match on contributions to an IRA. So a lot of benefits for using Webull. As you see, we use Webull for our market analysis, our due diligence, the majority of our trading. And if you'd use our affiliate link in the description box below, we would appreciate it. And you can also help support our BeachBum trading community, which we also greatly appreciate. So I'm using the online browser version of Webull. This is the market screen. So we can see, even though the indices were mostly down on Friday, we had more advancers than decliners, but the percentage of advancement was small. So this again supports the thesis that it was the rotation profit taking out of the Magnificent Seven that dragged the indices down, but the overall market, we actually had more advancers than decliners. Also interesting that we saw a net positive inflow into the NASDAQ for the majority of the day on Friday, and it only turned negative towards the very end of the day. So again, although we saw that 2% drop in the NASDAQ index, there was actually money coming into the NASDAQ, and typically there's an outflow on Friday, and this Friday we saw an actual inflow until the very end of the day. So again, it looks like profit taking out of Mag 7, and we see this traditional pop in the NYSE. So inflow of cash on Friday into the NYSE, which we tend to see. Again, just a quick reminder, you can also see the near-term earnings calendar in the calendar section in Webull. So again, very near term, who's upcoming. We've got Supercom, Albertsons, etc. So let's look at the best performing industries for the week. So healthcare was the top performer, was driven by United Health. Got natural gas utilities, so we got utilities, insurance, again defensive, so food is defensive, again utilities, coal, energy, utilities. Again, all this is led by utilities. So again, a very defensive move. Negative telecom, wholesaling, aerospace and defense, surprisingly negative. So again, once the Israel attack on Iran kind of was over, it looks like they retraced a little bit and popping on increased tensions there. Consumer goods, negative. Let's look at the ETFs for the week. So negative, that's the inverse on the NASDAQ, inverse on the S&P, up on the Dow. So again, Dow's more resilient. They're still up on the Dow, but down on S&P, down on NASDAQ, up on the VIX. So as again, we'll see, we've had increased volatility, pops on tension in the Middle East. Negative on the Russell, although that's positive on the Russell, so some people are betting it's bottomed. So regional banks got a rebound. So again, we saw finance, and they into banks. My opinion, I don't like that. Shipping. Again, healthcare, mostly United Health, banks, financial services, utilities, energy. Again, a rebound in real estate on Friday. Negative technology. Saw a retracement a little bit in basic materials. We'll see wood dropped off, lumber dropped off, and positive defensive. So again, all defensive moves. So wheat, I think they rolled the futures on wheat. We'll see a gap up on wheat. Ag, which is DBA. That's an Easy Mike favorite, right? Easy Mike. Bonds. Welcome Day Trader channel. Glad to see you in the chat today. I think I said hello to Ellen Krantz. Hope you all are doing well. Okay. So now let's look at the futures in FinBiz. And just another quick reminder, I forgot to paste the comment here, but recently Webull also started offering futures trading. So you can, I put that in the Webull channel in our Discord, so you can find the details of Webull's offer, and they're now again offering futures trading in Webull. So again, you can find that in the Webull channel in our Discord. So again, you can now trade futures in Webull as well. So again, we see there's steep declines in all the major indices. Again, looks like some people think Russell may have found a bottom. Dow looks like it found a bottom around that 3,800 level, turned back up a little bit. So again, the Dow is more resilient than the SPY. See that precipitous drop in the Nasdaq. Again, plenty of downside in the SPY. Nikkei's falling off. Plenty of downside there. Euro stock's holding up a little bit better, but definitely trending down. DAX trending down. Again, we see these spikes on the VIX, on the Iran attack on Israel, and the Israel attack on Iran, but they quickly retrace, so didn't quite even break 20, I don't believe. So, but we see the overall trend is up. Probably get a little bit of a bounce in the VIX on Monday, just from it being a weekend. If we get any further, conflict, any further attacks in the Middle East, we'll expect to see those spikes again. Again, oil was up over 85 on that conflict in the Middle East, and then when that cooled down a little bit, we got a drop below 85, so got support at 80, resistance at 85. And natural gas been pretty flat, just oscillating around that 175 level. Gold, again, you see it was consolidating right at that 2,400 level. It looks like that's now the level of support. So we'll see if it continues to consolidate, or if it either breaks down below that becomes resistance, or if it's going to leg up even further. Again, silver consolidated a base around 28. Looks like that's support. So very similarly, we'll see if that holds, if it's going to leg up, or if it breaks down below that and that becomes resistance. Again, we've got plenty of room for it to come down. If it does break down below those levels and heads down, I think we might get a significant correction in gold and silver before it trends back up. Copper been strong. Platinum came down. Palladium come down some. Looks like it's got support. Saw several of the grains dip down. Oats bounce. Corn, again, must have been a roll of the futures popped up. Wheat similarly popped up. Must have been a future roll again. It was trending down. Cocoa, new highs again. Again, lumber I wanted to look at just briefly because I looked at this and then looked at the ETFs. And we can see, even though it's looks like it's bottoming, we zoom out a little bit, still relatively high, still got some room to fall. So I looked at the ETFs we have on lumber, which are wooden cut, and I wait on those for a while, see if it comes down further. So again, in my humble opinion, it's always worth, even though it looks like something's bottoming, it's worth zooming out on it and see, relatively, is it a real bottom or just a relative low on these charts. Again, we saw bond yields have been trending up, so prices trending down. Finally got a little bit of a bounce. Again, I think that retest to that 5% area is kind of the bottom. I think we'll see this continue chop in that 4.7 area. Again, DXY was up around 106. Now it looks like it just barely dropped below that. So foreign currencies kind of bottomed there. Again, it looks like the yen may have finally found a bottom. And I know Easy Mike was saying he expects a upturn in the yen. Welcome, Logan Flips. Thank you for joining us. Hope you're doing well. So next we'll look at some ETFs. I've got a couple additions that I want to quickly look at from some of our BeachBum traders. Just a quick reminder, you can get 24/7 access to our ETFs Google Sheet that we use once we identify a potential opportunity in a topic, a commodity, an index, etc., be it long or short. Then we jump over to our ETFs Google Sheet, find the ETF with the risk-reward profile that we like, and then we can trade that trade idea either long or short with ETFs using our Google Sheet. And again, you can use our Google Sheet 24/7 by joining our Patreon. So let me open that up and grab a quick drink, and we'll look at some additions to our ETFs Google Sheet. Okay, the couple of new ones. First, I want to look at one that Becca mentioned in last week's chat, MTUM. This is another momentum factor ETF. So I put this in the research sheet in our ETFs Google Sheet so we can compare the risk reward profile of MTUM to the one we already had in our ETFs Google Sheet. QMOM, which is an Alpha Architect Momentum ETF. So now we've got a couple momentum related ETFs that we can look at. So first, if I go to the research sheet, I can do a find on that. So here's MTUM. Zoom this out a little bit. So we can see this is the iShares Momentum ETF. So we can see it's got a 52-week risk reward of only about 1.4, bottom to top of about 4.8. So we can look at the chart for this in FinViz. Again, you can access the charts, FinViz profiles in the links in the FinViz URL. We can also look at its profile in the ETF database via the link to the ETF database in our Google Sheet. So you can see it's been running high for quite some time. Looks like it got a double top, rolled over. So again, when we got that bearish turn, when the bears came back to the market, got that rollover and momentum. So now it's trending down. Broke down below its moving average, headed down to the longer term moving average. See, it does pay a dividend, looks like quarterly, 36 cents. So it's a small dividend yield. It is optionable. Look at the profile and the distribution. So again, a momentum variant index. component securities underlying index. To look at its chart, again, a nice added new feature in BinBiz. You can get a breakdown, so you can see it's pretty well distributed. So I guess they're picking, we'll see what their thesis is in the ETF database. Looks like they're picking momentum. So their number one pick was NVIDIA. And so we can see why the big drop. So NVIDIA, Meta, Broadcom, Lilly, Amazon, Microsoft. So again, very sensitive to the Mag 7. Netflix. We look at its profile in the ETF database. Large cap UX stocks with positive price momentum. So again, it's going to be large caps with positive momentum. So again, attributes to that downturn that we saw. We just looked at the holdings. So again, you can look at the holdings as well in the ETF database. Strategy is momentum. Weighting scheme is momentum. So again, if we compare the risk-reward profile of MTUM to the previous one we've had, QMOM. So if I go to our main sheet and search for QMOM, see it's got a 52-week of 1.48, so compared to 52-week of MTUM of 1.41, so pretty comparable. Bottom to top, 4.77. Again, this MTUM hasn't been around all that long. So I zoom out a little bit. It's been around for a number of years. So it's bottom to top, 4.77 compared to 3.52. So again, both of those are very comparable. So either one of those, if you want to play momentum, again, thank you to Becca for pointing this out to us. Looks like we might want to add that as an alternative for momentum trading in our main ETF sheet. So again, both of those, whichever has the risk reward profile, other characteristics, holdings that you would prefer to trade, positive upward momentum, MTUM or QMOM are alternatives that you can find in our ETFs Google sheet. Gerald Fitz is pointing out a new one I'm not familiar with, AMZZ. So that may be one that we want to look at for next week, if that's a 2x bull on Amazon. So maybe we'll do the research on that AMZZ from Gerald Fitz for next week. Is that okay with you, Gerald? Thank you for sharing that with us. Okay, the other one I wanted to quickly look at related to the Bitcoin halving and the future, of Bitcoin. Another way to trade Bitcoin, both the Crow and Easy Mike had mentioned SBIT. I guess Crow mentioned it and credited Easy Mike with pointing this out to him. So thank you to the Crow and Easy Mike for sharing this SBIT with us. So we do have BITI, which is another short on Bitcoin in our main ETFs sheet. But I want to take a quick look at this SBIT as another alternative for shorting Bitcoin. So again, you can find this in our research tab in our ETFs Google sheet. So we see risk reward profile. So it's 1.43 for 52 week. I've got identified a little bit higher support or a little bit lower top for that short. So 1.31, bottom to top about 1.31. We look at the chart for that. Again, it's a very new, so we don't have a whole lot of history. We saw when got that retracement in Bitcoin went shot way up. Now it's retracing as Bitcoin's going up with the halving. So again, pretty volatile, very short history. So I'd kind of like to see some more history on it. It's not optionable, doesn't pay a dividend, obviously. So just a short on Bitcoin. So if we compare that one to BITI, which is a long-term one we've had for shorting Bitcoin. So again, it's only got a risk reward 52-week of 1.03. Pretty, bottom to top is 6.2, short term of 5.6. So again, I don't think either one of them. This one has leverage. Let's see what the leverage is on it. It says it's ultra short. Let's see what the ETF database has on it. Well, it's too new. So vanilla. So it must have some degree of leverage. I don't know if it's 2x short. Do you know, Easy Mike, if it's 2x short? Or I doubt it's 3x short, but obviously this is a leverage product. Again, very new. So another alternative. Again, the Crow and Easy Mike seem to like this as an alternative to trade Bitcoin short. So again, we'll track that in our research tab and see, how it compares to BITI. Again, the expectation is right now, we're after the halving, Bitcoin halving that happened yesterday, or I guess early today, is Bitcoin will hit a new all-time high. We'll probably see some profit taking at that point. And again, in my humble opinion, that may be the time to jump onto BITI. Again, you can short-term trade long with BITO, BITX, which is a 2x long on Bitcoin. We also have several others on cryptocurrencies, Block, etc. So we have a variety. Also, Easy Mike likes WGMI for Bitcoin miners, although I guess the halving causes their rewards to be cut in half. So that might put some pressure on some of the smaller miners that are not profitable. So again, I hope that all helps. And again, another alternative to trade Bitcoin short with SBIT versus BITI. So again, I hope that helps. We talked about most of the pairs for longing and shorting, the various technology components, etc. I don't think we talked about Bitcoin, energy, oil, long gush, short drip, or long UCO, short SCO. We'll look at in more detail some of we've talked about shorting gold. We'll talk again about GDXD tomorrow. There's a couple you can long with GDXU, short with GDXD. Got several for the miners like JNUG, etc. Silver, short with ZSL, long with AGQ, and again we'll look at ZSL tomorrow as well. We'll talk about some of the other pairs for longing and shorting when we get to our strategy. Also, we've got a number of ETFs you can long and short individual stocks like Tesla, NVIDIA, etc. in our ETFs Google sheet, bonds, etc. Long on volatility, UVXY, short with SVXY or SVIX. Long the yen with YCL if it has got a bottom. We're already long YCL already. Okay, I want to grab a quick drink. We're going to talk more about some ETF pairs as well as part of our strategy. So let me grab a quick drink and let's talk about our strategy for this week of how to make money uh, trading when the bears are back in the stock market. Okay, our theme for this week is how to make money trading when the bears are back in the stock market. And I may have said this earlier, but I'll reiterate. And again, none of our content is financial advice. We're not financial advisors. None of our content should be considered financial advice. It's all for education and entertainment purposes only. In my humble opinion, I don't think we're in a bear market. I think we're just getting some bearish action. We're getting that healthy correction that many have been waiting for. Again, we saw particularly the tech stocks got way extended above their moving averages. So I think we're getting that correction. I wouldn't call this, I don't think we're in a bear market, although a number of stocks are either in or may soon be in bear market for that individual stock. Like I think Tesla is technically in a bear market now. Again, several of the others, Nvidia may fall into a bear market, although again, I think the relentless buy the dippers will keep buoying it up. But again, our goal is to make money trading in any market conditions. And I think, again, we've got the bears back in the stock market. So again, we've got a trending downward, and we want to know how do we make money trading when bears are in the market. So I've compiled a number of our previous videos, strategies on how to trade a bear market. Again, I'm not calling this a bear market, but the price action is definitely bearish, and we've got bears back in the stock market. So how do we make money trading in this environment? So again, I've compiled our number of our previous discussions on how to make money trading, when the bears are back in the market, and you can listen to those previous discussions via the links to the videos. One of the strategies, sell the rips. Again, I think we're going to get these positive upward bounces, particularly the Mag 7 from the relentless buy the dippers, the AI FOMOers. Although, again, there may be some disillusionment coming out of some of the earnings that, nobody's actually making money. The only ones possibly making money from AI right now is probably the cloud providers, particularly Microsoft with their ChatGPT, OpenAI, but other companies, your small companies with AI in their name, probably aren't making any money, and so there might be some disillusionment in those. So you want to sell the rips when those pop. When the buy the dippers come in, sell the rips, take your profits, and get out. So again, you can listen to several of our other strategies from our past videos. Also, I had posted back when we started the discussion on how to make money trading in a bear market of a number of leveraged ETFs that you can use to long, short various market indices, etc. And I've got that pinned in the ETF channel in our Discord. So you can see that list of leveraged ETFs, again, long or short pairs. And since then, we've identified, a lot more pairs of ETFs that we've added to our Google Sheet. So again, we have a lot more leveraged ETFs that you can long or short various commodities, indices, topics, etc. now in our ETFs Google Sheet, including individual stocks. So again, you can long or short Tesla, long or short NVIDIA. If you don't find a pair in our main ETF Google Sheet, we may have researched it already. So here's Apple, so AAPD, AAPU, AAPX, and like Gerald Fitz just pointed out, a new one to leveraged ETF to long Amazon. There's some to long Google. So again, you can find all kinds of ETFs to trade both directions in our ETFs Google Sheet. Again, you can find this discussion in our Discord in the ETF section, and I'm going to add a reference in that topic to the fact that we now have a lot more pairs to use for trading in our ETFs Google Sheet. So again, I would refer to our ETFs Google Sheet. If you're looking for a way to short any of these topics, commodities, indices, I would recommend seeing our ETFs Google Sheet. And again, the ETFs allow you to short even in a retirement account. So if you can't short individual stocks, which again, we trade primarily in retirement accounts, so we can't short individual stocks, but we can use these short ETFs to short even individual stocks in our retirement accounts using those ETFs. So again, I hope all that helps. We'd love to hear if you have any other ideas, about how to make money trading when the bears are back in the stock market. Please put that in the comments to this video or any of our other bearish videos. You can also find, bearish related videos in our BeachBum Trading YouTube channel by just searching for bear. And or in our Discord. So again, I'd love to hear your thoughts, any other ideas. If you have, like Gerald shared with us, a new ETF for longing. Again, let us know in our Discord. Again, we're BeachBum Trading, all lowercase, no characters, numbers, etc. So anyone else is an imposter. And again, we would never contact you directly if you didn't already know we were going to contact you. So if you get a request, DM, whatever from us, it's probably an imposter. If you let us know, we'll quickly ban them. So we've also been talking for several times about how to make money trading in April. So you can hear those strategies via the links to that video, how to make money trading in the spring. So you can also access those. Again, sector rotation. We saw this defensive rotation recently. And tomorrow, again, we'll also look at dividend paying stocks. Another way to, wait out the bearish trend in the market is collecting dividend paying stocks, generating income if you're waiting for the market to swing back up. And we'll also talk about some option strategies. So we are trying to make some money using some puts. Another strategy for how to make money when the bears are back in the stock market is by selling puts, buying them back on the corrections, selling calls on your position, buying them back when they drop back down. So again, we'll talk about that all in more detail tomorrow. Welcome, LinkedIn. Good to see you as well. So please also let us know what we can do to improve our weekly trading game plans, any of our other videos, our tools, resources, etc. Our community. We need your feedback to know how we can add more value for all of our fellow BeachBum traders. So we hope you all like this content. We hope you'll smash the like button, help us try to get the YouTube algorithm to share our content with more traders around. We'd also greatly appreciate if you directly share this content with your fellow traders. Let's continue to try to grow our BeachBum trading community for the benefit of all of our BeachBum traders, and we need and appreciate your help in sharing our content, reposting our social media posts, etc. And we hope to see you all again tomorrow, 10 a.m. on Sundays, same bat time, same bat channel for part 2 of our weekly trading game plan for April 22nd through April 26th, where we'll be using all this market analysis, all these strategies to select our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. So again, we'll talk about, why it's good to have a shopping list to take advantage when the bears are back in the stock market. And again, we'll talk about ways you can make money using puts and covered calls, option strategies, dividend payers as well. So we hope to see you all again back for part 2 tomorrow. And I thank you all for joining us today and watching, and have a great day.